So I was just actually just seeing the news reports, which was they are expecting more interest rate to come. So my summary is like the market is disagreeing with Fed. So I guess I'm just gonna go with what the market thinks so far until the Fed forces us to believe in them, kind of a thing. Because if you look at the market reaction, they think that the peak is here,
Right.
and based upon the market reaction, and then that's the direction we're probably gonna go anyways.
Yeah, it was an interesting take on it. I think that a lot of traders and investors essentially thought that Jerome Powell and the Fed committee are kind of bluffing, right? They're saying we see more, we need to do more in an effort to stay on the cautious side of things, where a lot of people are seeing core inflation is starting to crack, and again, that core CPI is what the hawks or the bears in the market are really just clinging on to. And if that starts to crack, I think dollar weakness is here to stick around, and I think that the indices could fly higher. But I think last week the market really got optimistic, like to a point that is almost concerning. I would say I'm still bullish on indices. I have been for a while, sort of looking for that topping in the Fed funds rate and projections and that sort of thing. But my take on it personally is that I'm still bullish, but I've got to see pullbacks and I've got to be cautious because, again, the Fed very well could surprise us. Again, earlier this year, there were forecasts for possible rate cuts. There were, hopes for that, and that sort of has been ruled out. And so there is upside, I think, but I don't want to be caught holding the bag, chasing the tops of these markets in terms of active trading. What do you think on the dollar? Do you have any charts or trades that you're looking at yourself?
I just want to say to everyone here, when you're talking about cognitive dissonance between the market and the Fed, one day when the market does agree or starts to agree with the Fed, it's going to be a large movement in a direction, dollar bullish, that might cut you off guard. That has happened in the past. I've seen in Discord that people are like, oh, it's going to happen in dollar because of a news event that in itself is innocent. I'm just mentioning that so that's you. So if you do choose to sell dollar, use proper risk management. My kind of deal with the dollar at the moment is it didn't go down what I wanted it to go down, and now it is down. I'm like, I've given up on it, to be honest, a bit. I see it as dead at this point. Well, still bearish technically, but I don't expect it to continue to fall due to people now going on vacation and going into July. It can probably still trend, but I'm not expecting more than 100 pips max move or 100 pip range until give or take August. I might be wrong, but right now I feel like the fun is over.
Did you know our market scanning software, the EDGEFINDER, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The EDGEFINDER not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the EDGEFINDER at a discounted price when they use promo code A1YT. You can check out the EDGEFINDER with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
Fair enough. Yeah. So, I mean, dollar has dropped pretty substantially, and I'm kind of in the same boat. I'm still bearish, but I just don't think that, selling it outright after all of that volatility last week, I think waiting for pullbacks is probably the more cautious approach that I like myself. We talked about the NASDAQ a little bit as you were getting on the stream, and Frank and I talked about this. The NASDAQ has been here's a weekly chart. And you could see, look how many green candles in a row. 1, 2, 3, 4, 5, 6, 7, 8 weekly candles in a row to the upside. What would you say to somebody who feels like they're missing out on NASDAQ? I've got a lot of comments, people asking me about NASDAQ, should I be buying it? What do you think? What would you say to somebody who thinks that way, Ivan?
What does your what does your data set say? Should you be buying in this situation? Okay, then you have to go through a lot of data on NASDAQ and see if you buy high, do you generally win? Is it going to continue on forever? And my kind of answer there is yes and no. You are unfortunately or fortunately blessed with continuation trades on NASDAQ, and you can more than anything else continue buying when it's so high. But is that the best strategy? Probably not. And is it going to continue higher? More than likely, because what is the driver of this sudden run? It is the belief that we are going to peak interest rates, which has been the cause of why Nasdaq has not risen as more than it has. So to me, until Fed starts increasing interest rates again, or until they insinuate that, this is going to continue higher. It's very basic. It's higher interest rate, lower interest rate. Nasdaq goes opposite. So yeah, this is going to continue higher. Is it going to breach 16,000 at some point? I would believe so. This is about patience. So
yeah,
any pullback.
Yeah, and sometimes you have to keep it simple like that. Like you can dig deep and look at a million different economic figures, but at the end of the day, the driver right now is the Fed and where it's at. Now, I guess, Ivan, we've got to follow up with that. Gold has not seen such a impressive rally. Again, Fed projections for a softening, monetary policy has not done anything to gold yet. Do you think it will? And I guess obviously we're trying not to speculate here, but if it started to show signs of strength, would you be looking to join the move, or is there something you'd rather be trading instead? Obviously it's very cheap, so.
Yeah, I still have my triangle, bonds versus commodities versus equity. Where do you want to put your money on? And right now, 10-year T-note is 376. I still would put my money on S&P before anything else. Though it's very fun. It's a lot of fun with Nasdaq. But there's also a lot of debt there. With high interest rates, you are going to see more and more failing businesses, in particular in tech, because they have so high debt to equity ratio on average. But to be honest, S&P 500, if it just comes down a bit more again.
Yep, and that's the thing. Sometimes people who trade gold, right? Ivan, you and I have been doing this a long time. Forex traders who get into this stuff, they're fascinated with gold. It's a shiny thing to trade. I get it. I like to trade it myself too. However, what you just mentioned, exactly, the triangle. Explain that to people who gold traders. Again, they're so fascinated with gold. But there's some competition there, right? You have gold, you have bonds, you have indices. What's the triangle? Tell us about that.
It's a I don't know if it's the triangle, but it's a triangle that I have. It's allocation of funds, mostly by hedge funds and pension funds. Where do you want to be? I believe that the rate of return that pension funds wants is around 5%. So if you only buy bonds now, you get 3.75%. That is not enough. So they have to invest somewhere else. Where else do they go? Okay, either indices / equity or commodities to get that return that they need of 5%. Now it also comes down to risk. So if there is lower risk in the horizon, you would then go to commodities and indices, and in which of those two categories have the least amount of risk with the highest amount of return. So it's the constant evaluation analysis of where should you be mostly allocated. And this is what traders do every day or on a regular basis in terms of where is the best profit to take. And right now, indices or stocks is raising more than gold. in commodities, so that's where the allocation is right now as of we speak. But over time, you want to be adaptive to the market conditions that is out there.
Yep. Beautifully said, and I think it should be a triangle. If it's not already a well-known thing, we'll call it Ivan's triangle of assets. So we'll lock that in stone. We'll write a book or something. We'll call it Ivan's triangle of assets. But yes, no, I mean, that's the thing, guys. You have to think. People oftentimes, they have a very narrow focus, and they think that, it's solely just the day traders that are pushing these things around. But you have to remember, you have hedge funds, pension funds, mutual funds, ginormous money managers that have to put their money to work somewhere. And that is the driving force for gold, right? You need central banks buying gold. You need funds buying gold. You need some fear about the underlying economy or some fear about future inflation. Those are things that drive that triangle to lean into gold instead of bonds and indices. Right now, indices are kind of the clear winner with the NASDAQ flying. So you have to look at the competition to gold to understand why it's not just flying high. Now, I still like it to the upside. I think that, cooling inflation the Fed funds rate starting to peak and starting to come down could be a bullish thing, but you have to look past just the Federal Reserve.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free EDGEFINDER, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.